Let's look at some information and charts on Cardano for Brave New Coin. So I'm going to put my bias up front and out there. I'm not a fan of Cardano, never have been, never will be. I will try to be as objective as possible, but keep in mind, for some of you that I hear in the comments below, what I have to say has no bearing. Their belief in Cardano or my understanding of Cardano. So with that out of the way, this is their website. I like visiting websites these days. Most projects have them. Cardano is a blockchain platform for change makers, innovators, and visionaries. Blah, blah, blah. Okay, great. It's proof of stake now in a decentralized way. They have migrated from whatever they used to be to proof of stake. So let's compare them to everything else that's proof of stake that I have available data to do so. Let's see how they stack up against the big boys as well, the non-proof of stake projects. And all of this analysis is sort of a flavor of what's potentially to come for ETH, because as ETH transitions from proof of work to proof of stake, you can't take the proof of work metrics and sort of port them over. It's a different blockchain, it has different functionalities. It's going to tell you different things. Historically, proof of stake blockchains have extremely high transaction per day numbers that you can't really value in any way, because if everything's free, then it doesn't really make sense to not curate the transactions in some way to remove spam. So it's just a really weird conversation. Like when you're looking at Ripple transaction data or even Stellar, all these proof of stake chains, it's great that the transaction costs are low. Don't get me wrong. It's just you can't compare them to a network where transaction costs are super expensive. So they have a robust roadmap. They've always had a robust roadmap. I'm not going to go through it all. It's, some would argue, the most robust roadmap of any project in the history of projects, right? You can go on and on about the roadmap, the roadmap, the roadmap. Ultimately, I care about the data. What are people doing? Are they using the chain? You do ICOs? Great. How many ICOs have you been on your chain? You do dApps? Great. How many dApps are on your chain? Are people using those dApps? You do NFTs, Tezos? Great. How many NFTs are on your chain? You know, people can hype and use these buzzwords and flavor of the month terms, right? But what it comes down to is, are people actually using it? You know, ETH appreciated in value initially because of ICOs. It appreciated in value again out of March in 2020 because of DeFi, right? Like these are the pretty obvious catalysts or factors. You needed ETH to participate in ICOs. You need ETH to participate in DeFi, or did to a large degree. You want to use your ETH to participate in DeFi and ICOs, right? With Cardano, currently, as I sit here in this chair, I'm seeing none of that, right? We can talk about dApps and blah, blah, blah. We can, again, look at the roadmap from Charles Hoskinson. Awesome, great, you're doing stuff. You know, development isn't dead. Cool. We can look at the Cardano ecosystem, and you can go through each and every one of these and say, is people using it? You know, are people using it, right? Do I care about it? Are people using it? You know, we can list everything. We can list New Balance. I still can't find this, by the way. It's just a bit of a weird, it's a weird one, the New Balance one. Their shoes, by the way, for those who aren't familiar with the company. But, you know, we can say we're doing all these things, which is great. But if I can't see it on the on-chain data, personally, either I'm looking at the wrong data, I have the wrong data, or it just doesn't matter, you know? And that I'm leaning towards the third one. Not just Cardano, I don't want to make it sound like I'm picking on Cardano, but that's for the most part for all these chains. So if we look at the staking component, they have 2,500 pools. I mean, really for staking, all I care about is how many nodes are there, what percentage of the chain is participating, and then what is the inflation rate for proof of stake. Typically, each project has its own website with the pools. This is just adapools.org. You can see the blocks, you can see the percentage of stake and the yield and the validators. It's very similar to EOS, similar to Tezos in the data perspective. So typically, you usually see a greater than 50% stake, really greater than 60%, because if you aren't staking, then you're getting diluted. So at the very least, you want to capture the interest, quote unquote, that's available to you. It's sort of your right as a holder. You don't necessarily want it to, you don't want inflation to dilute you. You know, that's my general read, right? So if you have the ability to do so and collect that interest, you're going to do it. It's in your best interest to do so. It's in your best interest to participate in proof of stake. So there's an incentive to participate. and a disincentive to not participate. If we get to the juicy stuff, the under the hood stuff, you can't deny that transactions counts are skyrocketing. This is above 40,000 now. Average transaction values have waxed and waned slightly as price has gone up and down here and is sitting at all-time highs. So you had a lot of probably holders and speculators moving coins leading to the run-up in mid-February. And now we're continuing to see this increase in transaction activity. So in a vacuum, bullish. Transactions up and to the right, that's exactly what you want to see. If we zoom way out and we just look at transactions, it's a new network. It's a new day over at Cardano. They are doing things they've never done before. Happy for them. Couldn't be happier. But keep in mind, this isn't necessarily as bullish as it looks because you're comparing whatever this network used to be to what it is now. And that's not really a fair comparison. It's like the training wheels are off and it's doing its own thing and it has transactions. So realistically, we need to see, ultimately what you want to see is the network go through a full bear cycle again and see where transactions sit with the new network, right? Because currently we're seeing a new network functionally plus bull market since January. So all of these are going to look completely different than they've ever looked. Not saying that's bad, it's just important to give context to the data, I think. If we look at NVT, inverse metric of economic utility, it is at lows, at multi-month lows. If we zoom in a little bit, multi-month lows rising, but in general, it's at lows, and NVT is an inverse metric of economic utility. And because of the high transaction counts, because of the high active addresses, because of the high on-chain activity, you're going to see an extremely low NVT relative to where it's ever been. Again, you can't compare this NVT to the NVT of pre-October 2020. It's just a different beast. So it's too early to tell. The same thing with the active addresses, right? You have all these interest-bearing accounts effectively, plus all the transaction counts that are rising. So yes, this is bullish in the moment. Does it represent a new paradigm for Cardano? We'll have to see, right? But in a vacuum, transactions and active addresses do support the current price action, which is price sitting at all-time highs. If anything, it makes me more bullish on price, seeing that the data backs this up. The last thing you want to see is a bearish divergence with price. If the on-chain metrics are flat or falling, Ripple's a great example. If you look at Ripple and we look at the NVT, which you can't really look at anyway for Ripple, but just looking at active addresses, right? Active addresses are rising, but they're not anything crazy relative to where active addresses have ever been for Ripple. And if we zoom way out, it's like, okay, we got 2017, they're high, but they're not insane. So for me, it's easier to be bullish on Cardano than bullish on Ripple because the data, although different than it's ever been based on chain functionality, looks incredibly bullish. So maybe I'm giving the data too much credit here. All right, so let's look at block sizes, because when we talk about use and activity and who's doing what and when, this is another metric you can use. Now, you can't take what block sizes tell you as complete gospel because, again, every chain functions differently. You can say, okay, BTC is boomer tech. It does things really bad as far as block size is concerned. So if you're valuing block size and that makes you bullish, you're going to see a higher BTC block size than an ETH block size because ETH just does things better, right? Maybe that's your argument. We can talk about block times. We can talk about all this stuff. But just comparing everything together and putting ADA in the mix, ADA has a smaller average block size than Doge. It's in the purple earth at the bottom. Doesn't really register with BTC on, especially. Smaller than Doge, smaller than ETH, smaller than LTC. Maybe this is just a silly comparison altogether, so it doesn't really matter that much. But if you're seeing activity that's more than just proof of stake, I expect to see continually rising block sizes, even if scaling is great, right? If you really see activity, you expect block sizes to increase. Let's look at all the proof of stake coins. Let's look at their block size. Waves is in the blue here. This was some scaling issues, right? You can clearly see the scaling problems for Pivx and Waves, and then that goes way down as things cool down. But red here is Cardano. So amongst the proof of stake coins with available data, ADA does have a clear outpacing block size compared to everything else. This is just my struggle to put this into context, right? You got to compare ADA to everything else. You got to compare it to ETH. If it's an ETH killer, you got to compare the ETH killers to the ETH killers. You got to compare everything to everything and see what it looks like. It doesn't mean I'm ultra bullish ADA relative to everything else. It's just important to see where it all stands. If you look at Cardano, Google Trends, they are still near all-time highs and rising, still above previous all-time highs. So there's clearly, worldwide by the way, clearly a lot of interest in Cardano still. On the Google Trends, these are searches and news and all sorts of stuff. Anything that touches Google. And they're almost rising back to all-time highs again. So again, I am more bullish probably than price itself would lead to believe because of on-chain metrics, because of Google Trends. You know, if Google Trends and on-chain metrics are going to zero, then I'm not bullish on any altcoin because nobody cares about it. You don't want to die in the dark if you're an altcoin. So here's the 15 to 200 monthly pivots, VPVR, RSI. Immediately, what we saw here was a growing bearish divergence. You had higher highs in price on lower and lower RSI. So that was certainly a knock against higher highs. You can see how this doesn't look if you're actually bullish, and it's not just a lack of momentum. You can see here we had 1, 2, 3 highs, and each time RSI got higher. You see it again here, RSI is getting higher, and then on the last leg, you get that divergence, and then it gets tired, right? So definitely always want to look for stuff like that if you're actively trading any of this stuff. As far as support is concerned, I like anything between 60 and 80 cents, the 200-day moving average. At this point, everything and their mother is extremely ready for some sort of mean reversion, has been for quite some time. You can see the 50 and the 200 here are probably the furthest spread apart they've ever been for ADA with available data. On the bull side, you can see how that gets on the bear side, how these averages get extremely spread apart, extremely away from price, and eventually it just gets too much. Another way to look at overbought, oversold conditions. So overall, the trend looks fine. Still a bull trend. You know, it can go to 65 cents and still be a bull trend. So I wouldn't be too concerned about that. Not a lot of VPVR volume support up here, but that's to be expected as prices at all-time highs. Looking at the cloud, still above the cloud. So again, you can't be bearish on price if we're above the cloud, above the 200. Those are the two best litmus tests I have for looking at bull-bear trend. ADA broke out in late November on the cloud here, and it's just been clean, super clean trend. Bounced on the Kijun a bunch of times in November, December, and now it's sort of back at a daily close Kijun touch very shortly in the next couple days. So if this crosses bearish on the TK lines, that says, all right, it's time to get out, and you're waiting for a bullish TK recross above the cloud or everything to reset. You know, I'm always most comfortable relonging when everything resets, right? You had this was the March dump, and you had your bull trend, get your TK cross, you're out. It's below the cloud, it's in the cloud. You're waiting some more. And then in November, you get your bullish Kumo breakout again, and off to the races, right? So we're currently closer to this neutral intermediate stage than we are bullish continuation, certainly. TK lines are flat. There's a large cloud which potentially paints an edge-to-edge move to like 89, 88 cents. Bearish move to 80, 88, 89. So still bullish on trend, less bullish than I'd like to see it if I'm actually trading this. The alligator fractal as well has had a hard time with all of this. This is a lower time frame. This is the 5, 8, and 13 MA. And you can see how this crisscrosses and looks bullish, gets bullish, and gets flat. And now everything's starting to get below those MAs. You can see where the stop loss is. It's currently at like $1.15 based on a candle close. So the MAs are currently trying to flip bearish. Price is closing below the median line, this red line, and we're starting to break the previous stop loss fractals. So collectively it says, be careful up here based on a low time frame MAs. Looking at ADA BTC, zoomed way out. If we look at all the data we have available since 2018, it looks like it painted this massive inverted head and shoulders that broke up, hit the zone you'd expect it to hit earlier, like a few weeks ago, and is now back in the consolidation figuring it out zone. But historically, ADAs loved printing inverted head and shoulders. There was one here that broke up. There was one here diagonally that broke up. And then this massive one, even if you're not a believer in chart patterns or anything like that, just pick some high and low that makes sense and fib it out. I think all of this is in a far distant future as far as price action is concerned relative to BTC. But we'll see. Maybe that's just my bias, right? If we look at the 50 and the 200 and the VPVR and pivots again, you can see, once again, 50 to 200, the distance between them is the most ever. Price is far above the 200, so seeing a mean reversion wouldn't be a massive surprise here, which would bring price to around 1600 sats. It's got to break the 50 first, which it hasn't done yet. It's got to break this VPVR support, which it has not done yet. But I'm definitely more neutral bearish on charts that look like this than the USD chart. And lastly, if we look at the ADA BTC cloud, it told you to go long in January, bullish Kuma breakout, along with that diagonal neckline of that head and shoulders breakout. You get your bull move as expected, and you get a TK cross bearish in this case, telling you to get out. So you're currently out if you're trading the cloud here, and you're just waiting for a bullish TK cross to tell you to get back in. So overall, ADA looks fine, I guess. I tried to be as fair and balanced as I could. The USD pair looks more bullish and neutral than the BTC pair, which looks neutral to bearish. For me, ultimately, I'd like to see ADA go through another bear cycle with the new chain functionality to trust the on-chain data a lot more than I do currently, because too many variables are active to really look at the on-chain data now versus where it was a couple months ago. So that's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.